Hello, everyone. Hope you had a wonderful trading week. Obviously, very active news Friday with China and then retaliation by obviously President Trump. So there was a lot of chaotic activity happening on Friday. So hopefully everybody was protected and did not blow their accounts up. So that all being said, just another friendly reminder: please be sure to always use your stop losses. They do save accounts. So just hopping into the dollar as usual to start things off, weekly time frame view. You can see here that we did in fact break and close below that 61.8 fib level. So once again, now we are looking at resistance at this zone. A high of maybe 97.60 to 97.70 is to be expected this upcoming week, followed by a further push down into around the mid fib zone that I target around 97 to around 96.90, and then I expect to see a little bit of a bounce at that point in time. Like I said, again back into around 97.20 or 97.30ish, and then we'll be looking for a continuation move further out in time into the 95.70 zone. There is a gap that does need to be filled down in here. So once we do go ahead and fill that, probably see a little bit of some volatility in this general vicinity here. And then obviously I'll update you all before we do get into this level, or as we do get there. It depends on how fast we actually get into this zone. And then we'll see how we go into the future, but still looking like we're going to be seeing a further push to the downside. So once we do go ahead and target that 95.70 level, then we'll see again bounce in this area and then looking for further continuation to the downside here into around the 94.10 level. But that's going to take some time to get there. So just dropping down to the daily time frame view to give everybody a little bit more of a clarity of what I'm seeing here. Again, we had a very strong rejection here of that 98 zone, 97.90 to be specific, and then obviously once that broke, then again, we started pushing down into the 97.50s. Still think that we're going to push down, as I said, around that 97 level here, which is that support zone that I do have in mind. And then we do have an opportunity for another bounce back into around 97.30-ish area. And then I expect to see, as I mentioned just a few moments ago, another smash to the downside. So obviously it's targeting that 97 up into around 97.20, 97.30-ish zone. And then this is obviously going to serve as interim bounce level, and then a further push down into around that 95.70 mark. So let's go ahead and continue on forward here. Talking about gold, I mentioned a few weeks back, and I think even last week, that we, after some kind of a near-term pullback, which we did in fact get, we saw gold again respect that 1500 zone and rocket back up. And as you can see here, we're already starting to see some bids come in here for further price appreciation. So we will see how far, if we do in fact even get a dip. But I do believe that we should see just a little bit of a pullback, 1525 ish area, maybe even 1520. Kind of doubting that, because there is starting to be a level of panic developing in the overall marketplace here. And I do believe that after we do get a little bit of a pullback, if and when I should say we do get a little bit of a pullback, we are looking at further targeting those 1550 to 1560s and then onwards upside. Now looking at our weekly time frame view, once we do go ahead and break out of this zone, in fact, let me just go ahead and switch over to the spot gold price so that we can actually have a nice clean chart to look at. Again, very important to always keep an eye out on the longer term look here. Now, as you can see here, looking at my fib setup here, the Fibonacci retracement levels to be specific, again, targeting 61.8 fib is going to run 1586 level, looks to be around that 1580 to 1586 zone. Again, could get there sooner than obviously all of us expected, as gold is looking like it's on a parabolic move here. Once we do crack that 1586 level, which should be soon, maybe even this week or the next week at the most, still looking at targeting that 78.6 level, which is around that 1700 to 1730 level. Now, the reason why I say 1700 is because if you look back here, we do have a few wicks here around 1706, 1705-ish. Beyond that, we'll be pushing heavily into those 1730s in no time at all. So again, gold, I am still remaining bullish on it, especially with what I just showed with the dollar pulling back into the 95.70 over time. Gold still looking for that upside move to 1580s and then onwards and through the 1600 level. Mid fib is going to put us around that 1666 level, and then before you know it, we'll be back up into those 1730s. So again, this is just starting to get its run going. Been saying it for some time. A lot of people are thinking, oh, well, when we get back up to 1900, it's going to be a great short opportunity. I would say that's probably a very, very big mistake because we have a giant financial bubble beyond which the world has really ever even seen. So I think that 2000 for gold is probably, in the longer term scheme of things, a joke, and probably looking at substantially higher prices from there as the world unravels as we head out into the future. I'm saying not in the near term. I'm saying in the longer term of things. So. Again, same thing will happen with silver. Look for short squeeze on that above 18, just to kind of point that out that that's what I'm looking at for silver and gold. Obviously, again, still looking for further upside push. 1560 should be here before you know it, and then on to those 1580s. So let's go ahead and continue on forward, looking at crude oil prices. And crude had a very, very, very rocky past couple weeks here, and the bulls have been slaughtered over and over. As I've been saying, wasted effort. I mentioned, I think, in one of my last videos that I did. It was either last week or the week before that. And again, this is the weekly time frame view. Just to kind of point out with the price action, we've had a very long wick all the way down to those 50s. Again, last 2 weeks, or 2 weeks back, we're looking at a very strong move here, very, very solid rejection of that 38.2 fib level, which I monitor heavily, but we held on to that uptrending line. So, of course, bulls tried to come in yet again and did squeeze pretty successfully, very, very high up above the 56 50s, I believe I was targeting, close to that 57 level, trying to get that breakout. And obviously, towards the end of the week on Friday, especially, we saw that strong move to the downside here, closing underneath the uptrending line here, as well as a lower close on the weekly and creating a lower low from the previous weekly candle. So again, I am expecting to see some upside push here a little bit, maybe up into the 55s. I'll drop down a little bit just to kind of show you what I'm looking at. And then beyond that, we're looking for further push to the downside, 50, 60s, 50/50s, as we obviously put in that low here a few weeks back around 50/55. That was not by accident. I expect us to be revisiting that very, very soon. Sometime this week is definitely on deck, if not outright next week, and then we'll start blowing through that level and start going back sub 50s into the 46/50s before we know it. And that 4670, it does look to be the case. We do have a lot of support in that general vicinity here, looking back to the left, so around 4680, 4670, not out of the question in time. So as you can see here, we had a very strong rally off of the fall here, all the way up and around mid-fib between my 61.8 and 786. Took us all the way back down to 23.6, up into the 50 retracement, back to 23.6, up to 38.2, mid to 50, and that 50% fib level, that is, just for those of you that are not familiar with fibs. And then again, looking for another retest of that 23.6 fib support, which is around those 50/50s. And then beyond that, looking for another crack to the downside here, which will put us at mid fib, like I said. And that's the distance between this base of the 23.6 all the way up to the 23.6 top, and that puts us at around a mid fib of around 4660 to 4670. So again, possible that we do see that very, very soon. It all depends on what happens. Obviously, a lot of political tension happening right now, and a lot of things happening with China tariffs on crude oil. So that is why you saw that huge plunge here. So I'll go ahead and just drop down to the 4 hour time frame real quick, not to eat up too much time in this video. Again, still thinking that we'll retest that broken fib level here around those 5460s. Possible that we do get into around 55. I even give it a benefit of a doubt of maybe even reaching up into around 55.45. I'll give it maybe just that much, but there's going to be a big brick wall at that level around those 55.40s. So around those 55s, I'll be paying attention very closely to see what happens if and when we do get up in this area. I do think, obviously, that we will see some kind of a level of retracement here. Again, just looking at my overall fibs from this move here. Just doing this on the fly, so this may not be completely accurate, just doing it off the cuff here, obviously, so forgive me for that. So 61.8 retracement takes us back up into around 54.50, excuse me, which is a very important level that I've been saying 54.50 needed to hold. Otherwise, we're going to be back in those 51.50s, and now I'm thinking even lower than that, into those 50 50 60s as we head out, 50 50s, and then further down into 46 60 to 46 70 range. So that's what I'm seeing as far as crude oil is concerned. And just to kind of wrap things up here with natural gas has also failed to do anything of substance, in my opinion. But again, I'll start off with that weekly time frame view and then work my way back down. As most of you that have been following me for some time are familiar with my approach here. So, again, just looking back in history, okay, looking at our weekly time frame view, again, we have a lot of support around those 190s. We haven't gotten there yet. So, again, you can see that the bears are still attacking here. And I was mentioning specifically that those 2.22s, they needed to be held in order for some kind of upside push to be met into those 230s. We saw a push up into the 2.24 level, and that was it. It just kind of flopped right back down, breaking underneath my 2.16 level. 2.14 is the last chance for this, in my opinion, for a near-term bounce. I think that what's going to happen is we're going to have a little chop action here, and if I drop back down to that 4 hour that I started the segment on, you can see that again we do have an opportunity for natural gas to try to get some kind of a push back up into around 220, maybe even as high as 221, and then we'll be checking that 2.14 level once again. I honestly believe that once we do hit this level, we'll probably see something like this up into 2.16 and then start looking at 2.08 all the way down to recheck the lows at around the 2.03 level. Still looking for bearish prices down to those 190s, maybe even a little bit worse. Now I'll say worse because if I go back once again to the weekly time frame view, you can see that again once those 190s break, you really don't have too much by way of support up until around 180 down to all the way into those 160s that we hit in 2016. Now, the repercussions of this trade war could have even further bearish impact on prices overall. We will see what the level of that impact is, but double bottom is not out of the question here around the 160s. 190 would be expected interim bounce level support. Beyond that, I don't know if we could even recover very strongly off of those 190s beyond hitting the 210 level off of a bounce of a 190. So we'll see what happens when we get there. There's still a lot of opportunity for price to continue to fluctuate between the 2.16 to 2.21 level. Just to go back to that 4 hour time frame view, you can see again that we are kind of trying to do a little bit of a flagging. We did successfully hold on to that 38.2 fib level. So again, that leads me to believe we'll probably at minimum hit 2.18, maximum high of around 2.21, maybe 2.215-ish on an extension, and then look for another pullback here, as I said, to around 2.14, resistance 2.16 at that point in time, and then onwards down into the support zone of around 2.08 with a potential and probability of hitting even a double bottom interim 2.03, and then we'll see if we can break out of the shell at that time. So if anybody has any questions, comments, or concerns, obviously you can leave the comments at the bottom. If you don't feel comfortable with that, you can reach out to me directly, thetradersperspective@gmail.com, for further information on some of the services that I provide that are listed on the intro and outro of each one of my videos. You can see the pairs that I provide analysis for my members, how often I provide those analyses, etc., etc. So if you have any questions, feel free to reach out to me directly, leave a comment at the bottom, subscribe to my channel, don't miss out. I do these videos every weekend for the general public and for my members as well. I do provide intraday during the week analysis as well, in the morning and in the evening every day, except for Fridays where I do not do an evening analysis, obviously, because the markets are closed. So, again, I wish you all nothing but the best green trades to everybody. Make sure you're protecting yourselves. Always measure your risk versus reward so that you get into a good trade setup. Don't be gambling. Always make sure that you have some kind of structured, rule based approach. Have a wonderful upcoming trading week.